Hello everybody, welcome to the January, Monday, and Tuesday, 27th through 28th price review. So getting started, we have the NASDAQ, the S&P, and the Dow, and we're looking at the 4-hour time frame. So as you guys can see, on Monday, we formed a bullish monthly SMT. So we formed an SMT between the weeks of the month. As you guys know, each week represents one quarter. So this is a bullish monthly sequential SMT. Now, some of you are wondering why this is valid, because I've been saying that the Dow is out of sync, and I said that on Sunday. But if we look a little bit closer to the previous week's premium and discount range, as you can see, we have the range high and we have the range low, and we have equilibrium marked out right here. As you guys can see, the Dow retraced into discount while the S&P and the NASDAQ took the low. So as long as the Dow retraced into discount and the S&P and the NASDAQ take the low to form an SMT, in a bullish example, I still would consider this valid SMT between the Dow. Now, if the Dow would have retraced down right here, where it was still in premium of the range and then continued higher, I would not have taken it into account and credited it. So now we're looking at the 4-hour time frame. And as you guys can see, after we made that monthly SMT, we had a 4-hour TPD. So the NASDAQ was down close, the S&P was down close, and the Dow was up close. So the reason why this TPD is valid, even though the Dow is trading in premium of the range while S&P and NASDAQ are trading in discount, is because whenever that higher time frame SMT formed, the NASDAQ was in correlation with discount. So if we have a monthly SMT and a 4-hour TPD, as you guys know, in TPD part 3, SMT skip is what you look for. So right here, we had that TPD on the S&P, and then what happened? We had a change in the state of delivery. So after we had that TPD, we can see that following candle formed a change in the state of delivery. Now, it didn't happen with the NASDAQ because, as we know, the NASDAQ has been the weakest pair out of all of them, and that's why it didn't deliver as high today compared to the S&P. But this still is considered a valid SMT skip, or what you would like to anticipate, because as you guys know, on Sunday, I said what we would like to see is stabilization. So this is stabilization right here, and then a weekly or daily SMT to kick the move off, taking us higher. And that is exactly what we saw. Now, we saw the daily SMT because of the SMT skip sequence. And we have our new day open marked out right here. So looking at today's price action, which would be Tuesday, as you guys can see, we formed a daily SMT below the new day open and below the true open. So the S&P and the NASDAQ took Q2's low. So there was an SMT between Q2 and Q3, while the Dow made a failure swing. And if we take this one step further, if you were cautious about this daily SMT being valid, since, as I told you guys, the Dow was decoupled and you might not have seen that small little retracement into discount, making it valid. But there was a 15-minute TPD that formed with the Dow, and on top of that, there was a new week opening gap. So if you have a sequential SMT and then a TPD on top of a new week opening gap, that in and of itself is extremely, extremely high probability. And after we saw that, we saw a run higher, and we formed a fair value gap with a breaker. So we had a breaker overlapping a fair value gap, price retraced into that, and then continued higher. So as you guys know, what I explained in the previous live stream, I remember somebody asked about it. This is the universal model. Whenever you have an SMT and then a fair value gap and a breaker overlapping each other, this rarely fails, and it is extremely, extremely high probability. And I'll probably release a video showcasing the model this Saturday as part of the core content lectures. So in a quick summary, we had a monthly SMT confirmed by a 4-hour TPD. That next day opened, we saw an SMT skip, and then that got confirmed. and then we saw this entry model form. So what you're doing is what I'm teaching you to do is you're identifying true reversals, and then once you have the high or low of whatever range you're trading, whether it be the monthly range, the weekly range, the daily range, whatever it is, once you have that established, then you have an entry model. So the most important thing is figuring out whether or not the high or low of whatever you're trading is in. And then once you have that, you have an entry model to go with it. You take the entry model and then rinse and repeat. That's exactly what I'm teaching you to do. And some of you have already even caught on a little bit quicker than I thought. And now going back to the NASDAQ and the S&P on the daily time frame, I still would like to see price draw towards these equal highs on NASDAQ, as well as these relative equal highs on the S&P. Now tomorrow is FOMC, so things could turn around a bit, but gun to my head, I would still like to see these highs get delivered. That is what my eye is drawn upon. So hopefully you found this one insightful. I will speak with you all tomorrow night. Good luck and good trading.